We're analyzing Healthpeak Properties, stock ticker PEAK, to see if its market price is a fair value. We're using the Select 6 analysis to look at the most telling financial metrics before estimating an intrinsic value for Healthpeak. Then we're giving a final rating to the business. There will be a key bonus metric along the way that just might be the tipping point when analyzing Healthpeak for your portfolio. Before we get into these valuable metrics, let's understand Healthpeak stock performance. Right now, Healthpeak Properties trades for $21.48 per share. In the last year, their stock price is down about 32%. In the last 5 years, Healthpeak stock price is down 10% overall. They're down about 2% annually. Over the last 10 years, Healthpeak is declining at about 7% annually. Their stock price is down 53%. Going back prior to the global financial crisis, over the last 18 years, Healthpeak stock price is still down 17%. The company's down 1% annually throughout this time. Healthpeak is a REIT. Right now, Healthpeak Properties pays a huge 5.6% dividend yield. This dividend yield is triple the size you'd be receiving from an S&P 500 ETF. Healthpeak's average dividend yield throughout this time is in addition to their compounded annual returns. Healthpeak trades just $1 above their 52-week low. The company is down $12 from their 52-week high. 1.5% of their shares are sold short. Healthpeak is a large business. They have nearly a $12 billion market cap. But why should we be paying close attention to Healthpeak? Healthpeak owns a diversified healthcare portfolio of approximately 463 in-place properties spread across mainly medical office and life science assets, plus a handful of senior housing, hospital, and skilled nursing / post-acute care assets as well. Healthpeak owns and develops high-quality real estates in the 3 private pay healthcare asset classes to help provide stability throughout industry cycles. Starting with metric number 1, we want their average return on equity in the last 5 years to be above 12%. The average REIT earns about a 6% return on equity. Looking for double this allows us to build in margin of safety based off the quality of the business. Healthpeak has had returns on equity all over the place throughout this time. They earned very low returns from fiscal 2019 until fiscal 2021. Their returns rebounded in their most recent fiscal year and averaged out Healthpeak's earning about 5.5% returns on equity in a given year. This is coming in slightly below the average of a typical REIT, meaning this is an X on metric number 1. Metric number 2, we're looking at their high-level growth. We're looking for revenue and cash from operations growth in the last 5 years. Both of these have to be up for this to be a check. In this time frame, Healthpeak grew their revenues by 73% and their cash from operations have increased by 6%. With strong revenue growth but only slight cash from operations growth, this is our first check on metric number 2. We're looking for decreasing shares outstanding in metric number 3. This is atypical for most REITs because many REITs tend to be externally funded, meaning they're either issuing shares or raising debt to fuel their growth. Healthpeak has been no exception. In the last 5 years, they've diluted existing shareholders by 13%. This shareholder dilution was pretty steady throughout these years, and much of this came through acquisitions the company made. Because we were looking for buybacks instead of dilution, this is an X on metric number 3. In metric number 4, we're putting our previous metric together. Here we're looking for cash flow per share growth in the last 5 years. Even though Healthpeak has slightly grown their cash from operations, this is being outpaced by their shareholder dilution. Because of this, Healthpeak's cash flow per share is down during this time. This is an X on metric number 4. Recapping where we stand currently, through our first 4 metrics, we only have 1 check and 3 X's for Healthpeak. We're evaluating how Healthpeak uses debt in metric number 5. During economic downturns, it's overly levered businesses that are likely at the greatest risks of poor outcomes. We want their net debt, which is their total debt minus their cash and their short-term investments, to be below the amount of cash from operations Healthpeak has produced over this time. Right now, Healthpeak has about $6.6 billion in net debt, and in the last 5 years, the company has produced about $4.1 billion worth of cash from operations. Their net debt is about $2.5 billion more than their cash from operations, meaning this is an X on metric number 5. It looks like relative to their cash from operations, Healthpeak is using a lot of debt. This could be a potential issue for the company. It depends on how their debt is structured, which is something that you can dig into their filings to learn more about. The company will break out when this is due, what rates it's at, and if there are any covenants associated with the debt. Through our first 5 metrics, we have 1 check and 4 X's for Healthpeak. Before we get to metric number 6, let's not forget about our bonus. As our bonus, we're looking at Healthpeak's dividend profile. Right now, Healthpeak pays a huge 5.6% dividend yield. However, people make mistakes all the time by blindly chasing dividends. It's important to stop and look at the underlying fundamentals of a business to see if their dividends are sustainable. Healthpeak has supported their dividends using their cash flows in 4 of the last 5 years. 2020 was the only exception for the company. Healthpeak has decreased their dividends since 2020 because of the business moderating their dividends to better match their cash flows. Healthpeak has had the lowest dividend payout ratio that they've had throughout this time in their 2 most recent fiscal years. This could potentially point toward them wanting a more sustainable dividend going forward. Keep in mind this is a snapshot of their last 5 years of performance and it's no guarantee for the future, but right now Healthpeak's dividend does look like it's supported by their cash flows. Keep in mind also the competing uses for cash flows in terms of the company's high debt loads. The big metric of them all, metric number 6, we want their average cash from operations to their total enterprise value to give us a yield that's above 5%. If this is the case, this will provide a slight risk premium to the yield of the 10-year treasury. It may offer a reasonable starting point for evaluation of Healthpeak. Healthpeak currently has a $19 billion total enterprise value, which takes into account both their market cap and their net debt position, giving us a perspective of the business more similar to as if Healthpeak were a private company. In their last 5 years, Healthpeak produced $4.1 billion in cash from operations, meaning they produce about $830 million in average cash from operations in a given year. When we divide that by their $19 billion total enterprise value, we get about a 4.4% average cash from operations to enterprise value yield. On a current basis, Healthpeak produced $900 million worth of cash from operations in their most recent fiscal year. When that's divided by their $19 billion enterprise value, we get about a 4.7% current cash from operations to enterprise value yield. On both a current and an average basis, those are coming in above the yield of the 10-year treasury. However, they're slightly down from that risk premium we'd be seeking. This is an X on metric number 6. Just because this is the case doesn't mean you're going to throw this business out. This is not a buy or sell recommendation of any security. It's not financial advice. Stay tuned as we come to a more concrete estimate of Healthpeak's fair intrinsic value before giving a rating to the business. Everything we've discussed so far is important, but there's something missing that, in my opinion, is the main reason to analyze Healthpeak Properties, which takes us on to using a discounted cash flow model to come to an estimate of Healthpeak's fair intrinsic value. A DCF model is based off the predictability of a company's free cash flows. Like any model in any discipline, its outputs are sensitive to its inputs. Starting with a 3-year average of Healthpeak's cash flows, then using historical growth assumptions to project these into the future, it's up to you to do your own homework to see if these are accurate and applicable. Assuming the business's cash flows decline at 5% annually for the next 10 years, then assuming they decline at 10% annually for the 10 years from there. If we add in Healthpeak's tangible book value, which gives an estimate of their net worth, if we were seeking a 15% rate of return, which is the rate of return Warren Buffett's looking for from his investments, in addition to his margin of safety requirements, from today's valuations, an estimate of Healthpeak's fair intrinsic value is around $18 per share. That's about $3.50 below the company's current stock price. Be mindful of some key points here. Healthpeak has had a low degree of business predictability in its past. This could be the case for the company going into the future as well. Healthpeak's 5.6% dividend yield would already be included in this 15% discount rate. We would not be doubly counting their dividends. Their tangible book value is an estimate, and with the business's low degree of business predictability, these assumptions may be less accurate than some other businesses. Most importantly, this type of analysis is not financial advice. It's not a buy or sell recommendation of any security. Before considering any potential investment decision, consult with your financial advisor. In just a minute, we'll give our rating to Healthpeak, but we have to address something first. What are the qualitative aspects of the business? Starting with the qualitative factors supporting a potential long thesis. Number 1, Healthpeak's expanding life science portfolio, currently experiencing all-time high occupancy and strong operating performance, could be an overlooked gem, especially after Biomed Realty's privatization. Number 2, Healthpeak's diverse strategy allows it to consider a range of opportunities across property types and business models as a means for growth. Number 3, Healthpeak enjoys industry tailwinds, including an aging population and regulatory changes that expand the pool of participants in the healthcare system. Then the key points supporting a potential short thesis. Number 1, Healthpeak faces significant reinvestment risk as it redeploys capital from the sale of senior housing assets into medical office and life science assets. Number 2, high supply could significantly impact the occupancy levels for Healthpeak's senior housing portfolio. If a prolonged economic recession also results from the current crisis, then the recovery could take years. Number 3, Healthpeak's new management team doesn't have the same operational experience or relationships as peers, which could make it difficult to achieve the same internal growth. There you have it for a balanced perspective of some of the qualitative aspects of Healthpeak. Now it's time to give our rating. In analyzing Healthpeak Properties, stock ticker PEAK, Peak, we learned the business earned slightly below average returns on equity compared to other REITs. They've grown their revenue strongly, but their cash from operations are just slightly up in the last 5 years. Healthpeak has also added on to their net debt position. They've diluted existing shareholders by 13%. It looks like the business is using more debt than their cash from operations can support. You'd want to dig into the company's filings to understand if this will be an issue or not. On both an average and a current basis of their cash from operations to their enterprise value yields, those were coming in above the yield of the 10-year treasury, but below the risk premium we'd be seeking. Healthpeak reduced its dividends after 2020 in order to better support these with their cash flows. Healthpeak has supported their dividends in 4 of the last 5 years. Their dividend payout ratio currently is the best that it's been throughout this time frame. It's worth reiterating this analysis is not financial advice. Performing our discounted cash flow analysis, if you've done the work and you believe those historical growth assumptions, from today's valuations of Healthpeak, if you are seeking a potential 15% rate of return, an estimate of Healthpeak's fair intrinsic value is only around $18 per share. While that's a few dollars below the company's current stock price, that's down from where the business has been in nearly the last 2 decades. The last time they hit that level was during the global financial crisis. Combining all the factors of our analysis together, Healthpeak looks like a weak candidate for further research. Don't let that discourage you if you're interested in the business. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, comment down below what business you want me to look at next. Thanks for learning about Healthpeak Properties with me, and have a great day.